Have you ever encountered your insurance agent approaching you to buy a new life insurance policy? But whenever you tell them that you have no extra budget for that, some agent may suggest to you to buy a new life insurance policy to replace the current one. Today, I'm going to talk about the issue of replacing a life insurance policy, ROP. According to the Bank Negara definition, ROP refers to cancel, surrender, or simply relaxation of existing policy within 12 months before or after a new policy is being purchased. It also includes automatic premium loans, which means that advancing the cash value of the existing policy to pay the premium, or simply reduction of premium more than 25%. It may not be your best interest to surrender, lapse, cancel benefit, or borrow cash value from your existing policy. Some of the disadvantages are: firstly, high cost of insurance. You may have to pay a higher premium with the same coverage or benefit because you're older and your health condition may have changed. Secondly, additional initial costs. You may have to incur additional initial costs due to commission paid to insurance agent or other admission expenses by purchasing a new plan. Third, loss of financial benefit. You may lose the financial benefit accumulated over years under the old policy if you were to surrender. Fourth, unfavorable claims implication. The 12 months incontestable period begin again in a new life insurance policy, which means that insurance company have the right to initiate investigation if claim arises. A claim may be denied under the new policy, which would have been paid under the old policy. Therefore, it is imperative to have a better comparison of benefit between the old and the new policy of which you intend to purchase before you decide to surrender the old policy. Some of the benefits you may want to compare: first, cost of insurance; secondly, period of coverage; third, current surrender value of the old policy; fourth, number of years required for the new policy to build the current surrender value; fifth, net loss, which means premium paid minus the basic cash value of the old policy. What if you just surrender, cancel, or turn your old policy into APL without realizing the disadvantages? Here are some of the remedy action that you can make. Firstly, contact customer service officer of your insurance company for reinstatement of your old policy and repay the outstanding premium of the old policy if such reinstatement is permissible. Secondly, if there is a risk representation of your insurance agent, seek assistance from the Complaint Bureau of your insurance company of the Ombudsman of Financial Services or Bank Negara Malaysia. Nevertheless, we should understand that your insurance protection requirement may change over years due to various circumstances. Here are some exceptions on ROP. Your existing insurance policy no longer benefit you. For example, you have bought an endowment for your child, but your child has grown up and you decided to surrender the cash value of the old policy to buy a new policy to enhance your health coverage. Change of financial capability. Insurance is a long-term financial commitment. You may have bought a comprehensive insurance plan which covers basic life, total permanent disablement, critical illnesses, personal accident, hospital and surgical, HNS, or we call it medical card, with investment element. Due to financial constraint, we've decided to stick to a lower premium single medical card rather than keeping the old policy of which you no longer afford in paying premium. Enhancement of your medical benefit. Your current insurance plan, in particular HNS plan, medical card, no longer keep abreast with the current medical inflation, and your insurance company does not provide you with conversion features. As such, you have no choice but to buy a new insurance plan. However, remember, the new plan that you would like to purchase is subject to 4 months waiting period and 12 months incontestable period. You may have to terminate the old plan after serving the above. The information on this video is provided for information purposes only. The information is not intended to be or does not constitute financial advice and not specific to you. Before using this information to make a decision, you should seek advice of your insurance company or insurance agent or approved financial advisor and undertake your own due diligence. If you find my video benefit to you, please do not hesitate to share to your friends. If you need further information on the subject matter, please drop me a private message on my Facebook and I'll reply to you as soon as possible. My name is Siu Leong Yu. Stay tuned for the next episode of sharing. And remember, always ask for a approved financial advisor.